Parag Thakkar, who is head and fund manager at Fort Capital, also thinks about it in the same fashion. Parag, great having you. Thank you for joining us in our studio.
Thanks for having me on this.
Are you constructive or are you cautious currently?
No, I would say that buy on dip is always the right strategy for a fund manager like us, because this gives us opportunity to buy on when actually everybody gives up, right, on a day like this. So first of all, some part of your portfolio which you have kept defensive, that can act as a cash today, right? For example, we have Hindustan Lever, ITC kind of stocks in our portfolio, which will definitely fall less, right? Or somebody might be having pharma names like Dr. Reddy, which we are not having, but I am just saying that those kind of stocks will act as a like cash today, and they will help you to relatively outperform. So I would say that, of course, the cyclicals, if domestic cyclicals like banking and cement, which I always mention, if they fall materially, and it seems they will fall for sure, because dollar index has gone up, US 10 years is at 4.5, so definitely FIs are going to sell. And FIs own what? FIs own banks, right? So large cap banks. So definitely there will be a selling pressure, and that should be used as a buying opportunity to, and fundamentally I would say that if there is a shallow rate cut cycle, which actually Fed has said, right, that they are going to reduce the rate cuts, and the expectations are now from 4 rate cuts to 2 rate cuts. If you ask any banker in India, and you will feel that except for a fixed rate lender like IndusInd Bank, everybody else was bracing for higher liquidity in the system and lesser rate cuts, because higher liquidity gives them room so that deposits can come easily at a competitive rates, and they can lend, because CD ratios are touching 85% for most private sector banks. And so that is one. And second, on the rate cut, when immediately the repo rate is cut, they'll have to transfer that to their borrowers, right? So on the same night, if you have given loan to a salaried person who has taken a mortgage loan, you will have to transfer the rate cut. So rate cuts are actually, if they happen fast and if they are 100 bips, it was negative for banks. So actually a shallow rate cut cycle is very good for banks, if provided RBI keeps liquidity in the system.
So in that sense, the RBI rate cut cycle was anyway quite disassociated with what the Fed was doing last few times. We've seen that, and in Feb, maybe one rate cut will come in, etc. We have our own economic concerns to look at. But just in the here and now, Parag, because obviously just a minute down for pre-open, so I'm not looking at these rates too seriously, it is looking like an ugly morning. It is looking like an ugly morning. And then even if I look at trend-wise, banks are hurting, IT is hurting, and all of that is going to pair out. I mean, I'm sure, I hope the Nifty is not going to be about 600 points down, and this will settle. Is this a buying opportunity for an index trade? Would you be looking at maybe collecting some blue chips right now?
Sure.
But it's a today question.
So basically, you have to phase it out, right? Because right now, see, one thing is very clear. Dollar index at 107 and US 10-year at 4.5. So you are not going to get FII money in a hurry.
Yeah.
That is clear. So let us be but valuations in banking and of course cement, because the cycle has bottomed out. I would say that in these two sectors, for example, I was just taking, for example, Federal Bank, I have taken names of ICICI, SBI earlier. All these banks are very, very attractive. 7 PE, 10 PE, Federal Bank is 10 PE stock. 10 PE stock, 1.2 times price to book on FY26. And now they have got Mr. Manian, right, who is, definitely, and I think they'll be doing some meet by March at least, and where Mr. Manian will brief their plans on how to improve ROE, ROA. So I think, see, it's and please, I am putting a disclaimer that everything what I am saying is part of our portfolio, is our view, but these are my personal views. And investors have to consult their own financial advisor and do their own due diligence. And these are not trades for today. Let me make it very clear.
Okay.
If you are thinking from medium to long term perspective, this is the view.
Record low on the rupee past the 85 mark, and yeah, all of this is expected. Everyone who's watching it, and I know, we flash it in red, we put that headline out, that is our job. But this is all expected after what the Federal Reserve is doing. I mean, I just want to know, Parag, and since we're talking long term and we'll get to more stocks in a bit, this sense right now in this conversation from the India perspective that economy mein kya ho raha hai, kuch gadbad hai kya? Are we entering a bear market? Is the last 4-year ka party over? Are you sensing any of that?
I would not say so, because in my view, in fact, the government after the election season is over is going to focus back on economy. RBI has made it very clear that now their priority is growth. So I am saying that if economy continues to do well, at some point this trade of Trump trade, what I call it, where dollar appreciated from, say, so dollar index moved from below 100 to 107, or US 10-year moved from 3.4 to 4.3, 4.4. At some point this trade will reverse. And if that coincides with economic recovery in India, we are headed for good times also. So you cannot rule out that possibility. Till then, you have to be safe in companies like ITC, where, for example, where I feel that the demerger announcement which has come on and which is going to happen on January 6, and I remember Mr. Puri telling it when the ITC stock price was 200, that this is not the right time to demerge hotels. And he has proved to be absolutely right? He is demerging the hotel business right at the peak of the hotels. Today I was reading hotel room rates are at all-time high.
You told Mr. Puri not to, this is not the right time.
No,
Mr. Puri said that.
He had said that at 200 rupees when everybody was asking him that why don't you demerge hotel business? And he is doing it now. And now when the company is making 1100 crore EBITDA, company has net cash of 1000 crores. You see valuation of Indian hotels, market cap is 1,25,000 crores. Now, ITC's total market cap today is 5,80,000 crores. I will not rule out that once the hotel business is demerged, today dividend yield of ITC is 3%. And if hotel is a capital intensive business, so if you demerge it, your cash requirement becomes 0 for ITC. So your dividend can go up to 4.5% dividend yield in ITC. And it protects you in such kind of environment when markets are absolutely volatile.
Parag, before we thank you, very quick, a minute, but what are your thoughts on something like Raymond? We are going to be in conversation with Gautam Singhania, of course. What are your thoughts on something like Raymond, which has got a bit of a reality mix? They've demerged the businesses, and retail and textiles, both of them are looking like it being in the thick of things.
Sure. So basically, as I told you, I have not tracked it very closely, and I don't have Raymond's in my portfolio. But definitely they have done whatever they can to create value for shareholders, and that is really appreciable. And as you said, Raymond is a great brand, and plus they owned a large parcel of real estate in Thane, and whatever demerger has happened and everything has happened to create value for shareholders. That credit I have to give to them.
Yeah, in fact, what I learned in that conversation is that they're looking at a possible listing of the real estate division by mid of next year. So June, July is the timeline that they're working with, and then of course you'd have 3 verticals, engineering, real estate and lifestyle in that sense. A demerged company better than the conglomerate discount?
Definitely, absolutely. Because for example, ITC hotel business, I was just talking, right? No analyst would have given a value of more than 20-30 rupees per share till the demerger talks begin. Now once the demerger talks are on, people are comparing with Indian hotels, right? That Indian hotels is making 2,000 crore EBITDA and it is trading at a market cap of 1,25,000 crores. If ITC is making a EBITDA of 1,000 crores, ITC hotels I mean, then you can get a 50,000 crore market cap. And your own market cap is 5,80,000 crores. And remember, 5,80,000 crores, you will generate 25,000 crore free cash flow next year. And there is no need of capital in cigarette and FMCG business. So you will give it out as dividend. So 4%, 4.5% dividend yield. So I would always, so just coming back to your point, definitely demerger creates value. What did Reliance did in Geofinance, right?
Value unlocking is the name of the game. Thank you so much, Parag, for speaking with us today.